Selloff of the Japanese yen accelerated today on the prospect of unlimited easing from the Bank of Japan. The weakness started yesterday when current Prime Minister Noda said that he will dissolve the parliament, which would in turn trigger an election. According to latest polls, the ruling Democratic Party of Japan might lose to the opposition Liberal Democratic Party in the election. And LDP leader Abe is known to be an advocate for more aggressive easing from the central bank. Indeed, Abe reiterated today his call for the bank to raise the inflation target to 3%, which is very aggressive considering that the current 1% target is already out of sight. He noted that Japan needs to be stronger than what the current government is offering to end deflation. Abe also said that the Bank of Japan should cut the benchmark interest to zero or even into a negative region. US dollar Japanese yen broke through the 80.67 resistance while euro yen and sterling yen are set to revisit recent highs. Elsewhere, risk aversion is still dominating markets. Late Selloff overnight pushed the Dow Jones down 185 points and the S&P 500 down 19 points. Asian equities, except Japan, are broadly lower. But major currencies are relatively calm against the dollar, except that the sterling maintains its post-Bank of England inflation report soft tone. The October Federal Open Market Committee minutes unveiled that policymakers discussed several issues at the meeting, including replacing the calendar language to data threshold in future guidance, and implementing additional asset purchases after the expiration of Operation Twist in December. However, no consensus was reached during the meeting and no action is expected in December. The minutes also stated that the Federal Committee staff revised up the economic forecasts in the near and medium term but suggested that progress in reducing unemployment over the projection period was expected to be relatively slow. The euro is supported as Fitch affirmed Ireland's BBB+ rating and upgraded the outlook to stable from negative. Moody's maintained the rating for Ireland and said that it no longer sees any risk of Greek-style losses for Irish bondholders. Moody's also maintained the negative outlook for UK's rating and said it will review the rating in 2013. The Aussie is soft on news that the Reserve Bank of Australia sold $483 million net in October through the other outright transactions category. That's the highest amount sold since June 2009. Note that the so-called other outright foreign exchange transactions aren't intended to affect the exchange rate, according to the Reserve Bank. And it's believed that such off-market transactions will take some pressure off the upside for the Aussie. Looking ahead, Eurozone GDP and UK retail sales will be the main focus in the European session. Meanwhile, US CPI, Empire State and Philly Fed surveys will be released together with jobless claims in the US session.